With us, Michael Price, MFP Partners. Michael, we're talking M&A here. The idea of what's good M&A. How can our listeners, our viewers, gain value in M&A? What do you buy to climb on board the 2010 juggernaut?
Okay, so you always want to own the target. You don't want to own the acquirer.
I want to own Cadbury, not Kraft.
Exactly, but you want Kraft doing a smart deal, like Buffett, who owns 9.9% of Kraft. You know, he wants them not using their shares. He wants them using more stock, especially when rates are low. So you want to pay attention first to own the target. Own companies that are vulnerable, not companies that are so large that they can never be taken over, number one. Number two is, you want to be aware, would your company issue shares in a deal? Now, Buffett's never issued shares, but he is in Burlington Northern. Maybe he thinks stock's getting a little rich. But the stock just got added to the S&P 500. We talked about that before,
right.
So it moved up artificially.
Right.
That's a technicality. What you want are synergies. The bidder often understates the synergies. We sometimes double them. And then you put a multiple on the synergies. The savings of combining the two businesses. Irene Rosenfeld said it's $600 million at Cadbury. We think it's $1 billion.
Like $1 billion.
And you put a 2 or 3 multiple on that. It'll take them a year or two. You put a multiple on that and back that into the pro forma shares, and that's accretive. Those synergies help. Pepsi, they're buying 2 bottlers. They understated the synergy.
You saw this with Thomson Reuters as well. I mean, the idea that Thomson had to go before the EU Commission, they downplayed the synergies big time.
Big time. Of course. They want to keep things in their back pocket for the next quarter's earnings.
Right.
When you want to look for targets, what do? You pick industry by industry and go for the smaller players? Are they the most likely ones to be taken out?
Well, targets are companies that are oversold, that are vulnerable. Look what's happened recently with earnings disappointments, with litigation. We've got all sorts of situations out there, where after the last year in the markets, companies just got too cheap. Now, some are protected by artificial things like poison pills and staggered boards. Some are protected by just bad business, bad management, or too much debt. But others are vulnerable. So our job is to find clean companies without those artificial protections.
Without Class A, Class B structure?
Yeah.
When you look at bank managements, Ken and I hear about bank consolidation nonstop.
Right, sure.
How do you find smaller banks that are ripe to be taken out?
Well, you got to do a few things. One is what really matters is their geographic footprint. Are they 1, 2, or 3 in a market that's attractive? I couldn't care less about the west coast of Florida today, but I love, and we did a big bank recap in Portland, Oregon. The Pacific Northwest is attractive. To me, the Southeast is not yet. The Northeast, you get a footprint on Long Island. I think that's terrific. New Jersey, that's terrific. These are areas that had less of a bubble, right? Have very attractive deposit franchises. So you want a deposit franchise. You want low-cost deposits. You want a bank that's not paying much for their money.
Do you get managements that don't want to, they don't want to let go here? They enjoy going to the Rotary. They enjoy playing golf. So, they just don't want to let go.
But if you've got to identify a good management, a good deposit franchise, a big net interest margin. Then you've got the major banks. So I think there are opportunities in small banks. Then you got the big banks. We are long both Citigroup and Bank of America. I like Bank of America longer term, fundamentally, earnings power, the franchises they bought, and the silly criticism that they're under right now, which is absolutely silly by New York State.
Let's get back to M&A here. Do you have a name or two? Who's next?
Well, we are long Harris Corp. They make radios for the Army. We think that they had a bid a couple of years ago. We think it's a highly attractive business, clean as a whistle. Army radio demand. The guys out in the field need more radios. That kind of business with a clean balance sheet is very attractive to me.